Hi, Jonathan York from Bay Financial Partners, looking at investment markets. Another pretty interesting week for the Trump administration. Plenty of coming and goings in terms of hiring and firing of staff. It's just going to be very interesting now to see how the new Chief of Staff, Kelly, whether he can really get the ship back on track and start to see some of the policies that were sort of election pledges and mandates going forward, see if he can get those into practice. Because at present the Trump administration has been very light on its policies. All they've really been doing is sort of trying to put out one fire and then another one starts up and they have to try and contain that. There's still the ongoing situation with the Russia investigation. And again, it's going to be interesting to see how he handles that and what the outcome of that turns out to be. But from a market perspective, the US market seems to be pretty much ignoring what's going on in the White House, setting sort of fresh highs pretty much every week. Earnings were pretty good in the US. The economy is pushing on at a pretty good rate. Growth is okay. Unemployment, is very low. The only sort of caveat against that is the inflation target, which, inflation appears to be sort of falling off a little bit and just below the Fed's target. But the Fed still seems pretty comfortable with the current level and still looking for a rate increase before year end. And equally as important will be the potential reducing of the balance sheet as well from the Fed. That is probably likely to start in September, providing the data is supportive of that. Obviously on that inflation front, quite a bit of that's been caused by oil. Oil has had a pretty much a major roller coaster ride over the last sort of 18 odd months. But just last week was up around sort of 8% and pushing back around that sort of $50 a barrel level. Now that's sort of quite interesting because a lot of analysts and economists are sort of predicting that's going to be pretty close to year-end pricing. There are some out there who are still looking for $60 to $65. Now that's obviously still a pretty major increase from current levels, and it's just going to be interesting to see how this sort of plays through. Although interestingly, a few now are starting to talk about the fact that the market is almost back into balance now in supply and demand, which has obviously been the major cause. It's been oversupply, and that's been the major cause of the price fall over the last sort of 12 to 18 months. Eurozone's doing pretty well as well. The PMIs are sort of encouraging out there above the 50 level, which implies an expansionary economy. What is interesting though is some of the analysts and on the tape now are starting to talk about a potential Brexit reversal. Now I don't know how that sort of stands constitutionally or sort of legally with the Article 50 being triggered, etc. But it'd just be very interesting to see how this sort of plays through. Certainly the UK's exit from Brexit will be pretty major and has some pretty major implications. So it's going to be sort of watch this space and see how that sort of plays through. If you're cynical, possibly one reason why they're starting to be talked about is that it's starting to hit home in the UK. The actual implications of Brexit now. You've got a bit of falling growth. And it's all of a sudden the prospects over the next sort of 12 to 18 months don't look quite as rosy. Obviously, pretty major political move here in New Zealand, with Andrew Little standing down so close to the election as leader of the Labour Party. Jacinda Ardern's taking over, and it's really got a pretty tall order to try and steady the ship and get Labour back in the polls going into that September election. But elsewhere, New Zealand again pushing along a pretty good rate. Again, the only sort of issue out there is potentially sort of lack of inflation in the economy. That starts to fall away a little bit. Reserve Bank is still talking about a rate increase no sooner than sort of 2019. That could really be put to the test because US rates look like they're going to cross over New Zealand rates sort of mid next year. That'll obviously put quite a bit of pressure on the currency, and it'll just be very interesting to see how New Zealand sort of stands up with higher rates in the US than currently in New Zealand. As always, if you are looking for income options, there's plenty of alternatives out there, and if you're interested in discussing what's available, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.